Good morning. Sorry for this late delay. Once again, I don't know why I couldn't connect. Once I figure that out, it won't happen again. So today, I want to pick up where we left off, but backtrack a bit because I did not go through the setup of the calculator. I wanted you to buy the TIBA2 Plus, and some students would rather use their own personal calculators that they already have. And I said that would be fine as long as you learn how to use it. And I'm going to teach with this calculator, and maybe it will help with whichever one you've chosen to use. This has to be a financial calculator, and you do need to perform the financial calculator operations. A lot of what I do, you should practice. Maybe you won't use it. Maybe you do things a different way. But at one point, you're going to have to use the calculator. So better to learn it now than later. So I'm going to pick up with the notes that we left off. And so that's what I'm going to do. I'm going to work on completing those notes. And before I give you more notes, you notice in the set of documents that I sent you last week, there were questions and solutions to some of the documents. The last one I didn't give you the solutions because I want to work out those together, and then I'll send you the solutions afterwards. Are there any questions? Is there anyone who did not receive the documents? If you did not receive the documents, send me an email and I will send them to you during a break. All right, so what I'm going to do, let me just put this image up a little higher. All right, so let's work from the beginning now. I'm using the document with 2 pages on it, the one I sent you, because when I use that slides, it's too big of a file and it crashes. So we need to set up our calculators. This is the beginning. So learning about the BA2 Plus. How many people actually have this calculator? You can let me know in the chat who went through the trouble of getting it. So we have to learn about the different kinds of clearing operations. Very good. Okay. So we need to familiarize ourselves with the different memory storage and how to clear those memory. One moment. So we begin with clearing the entire, or resetting the entire calculator. This is known as a hard reset. So this would be why is that happening? Dear, I don't know why I have a blurry pencil. Is it better? All right. I was doing a little bit of training on the weekend. Okay, so this is a hard reset. And this will clear everything. It'll wipe out, it'll reset your calculator to the manufacturer settings. Okay, if you got the HP10B2 and you can't figure it out, there are YouTube videos, and I also have some slides if you want me to share them with you. Email me if you want them. All right, so that's the hard reset. That'll reset the entire calculator. Now, you don't want to do that unless, okay, let's say, okay, so first of all, you identify the second function key, and then reset and enter. So let me show you where those are, and then I'll talk about it. So this will reset the calculator, unless you have some settings in there that you don't want to change, you can do this. So it's second, oh, let me clear the screen. So this CE key, oh, I need to make sure it fits. Hold on. I'm gonna make sure this fits. I should probably give it its own. Okay, so the CE key, it just clears the screen. Clear work is on top, but right now all I'm doing is clearing the screen, not the memories. So if I want to do a hard reset, I would hit second, wait, let me go back to show you what it said. So second reset, enter, okay? So second reset, enter. So second reset is at the bottom here, and then enter. That resets your calculator. All right, so that will start you in manufacturer mode. You see, right now, I have, by default, 2 decimal places for my calculations. Okay, and so yeah, second reset at the bottom, and then enter, and it's reset. So now I'm forced to do all the other settings. The next one is TVM stands for time value of money. So from last class, we worked with the time value of money. Time value of money is the third row down. Those are the time value of money keys. So these ones down here, this row here. Okay? The row beginning here with N. And usually I'll enter the variables, the values of the variables from left to right. And we need to touch all keys. So those are the time value of money keys. If you have any values in there, you want to reset those. Let me put some things in there. All right, so there's some things in there. And I'm going to clear, I want to clear that. Now I can clear the screen, but that's not the same. There's still stuff in here. Well, it's not showing, but there's still stuff in here because I can still compute that number. So the values are still stored. So I want to clear just that. I don't want to touch anything else. So I'll hit second and clear work, not clear work, sorry, clear TVM, which is here. All right, so that just clears the TVM keys. Now let's check that that's true. There's nothing in there now if I ask to compute FV. All right, so that just clears that row. What's next? Next is the clear worksheet. Go clear work. So in the calculator, in addition to the TVM row, that's separate from the worksheet that you have to enter cash flows for net present value calculations, which we're gonna get to today. We should get to today. So if we want to clear that, let me show you what that is first, and then we'll clear that worksheet. So, oops. So here are the worksheet values are entered using this key here, the cash flow key. And also the worksheet would include values entered through statistical mode, which is here, second data. That's how I enter statistical data. So if I enter statistical data, I hit a value, enter down. So I'm going to put some numbers there. So I have two pairs of values for my statistical calculations, which we'll talk about later. And now I want to clear it because I want to use it for something else. So you see, it's right now there are things in it. If I use the arrow key, I see it's full. So I want to clear that. To clear that worksheet, I hit second and clear work at the bottom, and that clears the worksheet. You have to be inside the worksheet. Now this might not be relevant right now because we haven't done any problems, but make notes, all right? So you need to be in the sheet to be able to clear it. Same thing with the cash flow keys. If I enter values into cash flow keys, which we'll talk about as well, you'll appreciate this later. Oops, that wasn't a value. Anyway, so there are numbers in here. If I use the down arrow, there are values, okay? So if I hit the bottom clearing screen key, that doesn't clear them because if I hit CF again to see the worksheet, it's still full. All right, so now you're going to want to clear that with the clear worksheet. So this is the same as for the statistical worksheet in the sense that I do the same operation. Second, clear work. Now it's gone. Once again, you have to be in the sheet to be able to clear it. So if I had something, let's see, if I had something entered into data, and don't worry if you don't follow right now, you will appreciate this later, and you can watch this video later as well. So I'm putting stuff in here, and let's say I put stuff into cash flows. So as I put things, I have to enter, I scroll down, just like Excel, I will have to enter the values and going down. Oops, that's not what I wanted. All right, so now I have items in the cash flow keys, and I have items in the statistical function keys, or the memory. So I have things in stat memory or stat worksheet, and I have data in the cash flow worksheet. So if I erase the cash flow worksheet using second clear work, do I necessarily clear the data in the stat mode? No. You see? So they're separated. This way I avoid doing a hard reset and erasing everything. So you will solve problems where you'll have information in both places, as well as one other memory storage I have to tell you about, and you don't want to clear them all at the same time. You might just want to clear and work at entering new cash flows, for instance. So let's clear this from the data in the statistical worksheet. So I hit second, clear work. It's gone. Questions? That's right, Juan. So the hard reset restores factory settings, erases everything, wipes out all the settings we're going to make, the next 3 things we're going to do, and that's not good because then you have to reset them. And even if you don't have this calculator, some of this would be relevant probably for the calculator you're trying to use. Same sort of thing. So our calculator is currently in the factory settings with 2 decimal places. Now that's not enough. For this class we want, we need to, and you'll learn, we need to retain the decimal places. In fact, I'm going to ask you not to round any intermediate calculations. So if you need an interest rate, for instance, to put into another problem or another part or step of a single problem, you need to retain all those decimal places. So I'm going to teach you how to store decimal places because the calculator will keep several, like up to 25 I understood in the past, but maybe it's more now. And in fact, the banks will keep, that they have the software they use could keep an indeterminate amount, a lot of decimal places. And why? Well, it's relevant when you're working in large quantities, right? So in large amounts, sorry. When you're in the millions and billions and trillions of dollars, those decimals matter. So they matter to us. So I want to see those decimals on my screen at least. I want to see the most I can see, and the most I can see will be 9. So we need to set the calculator decimals this way, right, for 9 decimal places. So we have, right now it's 2 decimal places. That's not sufficient. So we need to hit second, which activates the blue, the words in the upper part of the cell are key. Second, format, and now it opens up how many decimals you want. Now it's set at 2, so we need to change that to 9 and hit enter to store it. And enter was fine. That should be done. So now let's check if there are 9 decimal places. So now it's not showing all of them, right? It's not 0.00 how it was. So let's check. Let's make a calculation. So what I did was second, format, enter. So that is now second format 9, enter. So now let's check. Let's make a calculation. Calculate 9 divided by 11 equals, and you can see all the decimal places. You see? All right. Got it? So the answer, what was the answer? 0.8181818. And I have 9 decimal places. Next, what we're going to work with is compound interest. And I'm going to help you with learning about compounding that is stated in a time period that's different from the actual compounding interval. So, if you don't understand what I just said, that's fine. But so far, what we want to make sure, and the formula I'm going to teach you, use the interpret compounding as the same as occurring over the same interval over which a statement of the interest rate is made. So what I'm talking about is we're going to be working with effective rates, and for example, the annual rate compounded annually. Okay, so the annual rate compounded annually, it's stated over a year and it compounds over the year. So when those are the same, that's known as an effective rate. And you're probably wondering, well, how can it be different than that? But you will learn. I will show you how that works. So for now, we need to tell our calculator that compounding occurs once per period. And that's how I'm going to set up my problems so that they do that, because my formulas are such that compounding occurs once per period. So we're going to conduct these, we're going to make these settings, and now people with the other TI calculators will make sure of this. Every time they enter something, they got to make sure that this is set as well as the second one, or the last point. So if you have the TI 83 or 84, that's what this is for. So you need to, in our calculator, the BA2 Plus, we need to set second period per year. That's what that stands for. And you want to make it 1 and enter. So these are the settings for that. And for the HP 10B2 Plus, it's similar. You need to set this up. Okay, so every calculator you have, set these 3 things up. So let's see. Compounding once per year. Second, P by Y, 1, enter. So it's going to be, let me clear the screen. Second, P by Y, you see it over here? 1, it's already set to 1, so that's not a problem. On the HP 10B2, it's usually set to 12 for some reason. That's what it seemed to be. So second, P by Y, 1, enter, which it already is, so that's fine. So that you need to make sure that that's 1. All right. All right. Any questions so far before I do the last one? Okay, no questions? The final setting is to ensure your calculator is in end mode. So it will be. The factory settings are default to end mode. However, in this class, we will change that. These are the steps to get it back. All right, you need to make sure every time you use your calculator, you can double check that this is set. And it'll only be changed if you change it, because the factory settings are in end mode usually. It's very rare in 20 years that I've seen a calculator that has defects, but I have seen calculators with defects, so just making a point. If your calculator can't do these things, it might be defective. And you'll find out soon enough when we make our calculations. If you don't get the same answers doing exactly what I've taught you to do, something might be wrong with your calculator and you should return it. One moment. All right, sorry. Okay, so let's do this. Second begin, second set. So payments are default at the end. Let's turn them to payments at the beginning. Now, what am I talking about? Payments like paying for or making a car payment, or paying your rent, or paying a mortgage payment. These are at the beginning of a period, right? Before you occupy an apartment or home, you pay in advance. And usually, yes, for renting, you're going to pay in advance. And car loans, you'll pay in advance as well. So, let's see. If I hit second, now I look for begin, it's here on the time value of money row. Begin. Now on the screen it says end. It's telling you that it's in end mode. Okay, so second begin is telling you it's in end mode, but now I want to toggle it. I want to switch it to begin mode. Second set flips it to begin mode. And that's it. So now my calculator is in begin mode. And what do I see on my screen? If I clear, I still see the letters BGN. So this is to remind the user that you are currently in begin mode. Now, we usually assume, unless otherwise told, that cash flows occur at the end of the period. Payments, so if you are you're earning interest is earned at the end of a period. So that's why end is a default. So we can't leave it like this. We need to change it back. How do we change it back? The same steps. Second, begin, second, set. And now if I clear, the BGN is gone. Is that okay? So I'm going to turn it back to begin mode. Second, begin, second, set, clear, and I'm in begin mode with the BGN on the top of the screen. Now I'm going to turn it back after I've completed the exercise or solved a problem. I hit second, begin, second, set, and I'm back to end mode. Should I go slower, or is that okay? One more time. Second, begin, second, set. Clear the screen, but the BGN is still there. Let's get rid of it after we've solved our problem. Second, begin, second, set, and it's clear. All right, so if there are no more problems, or no more, if you don't have any other questions, I'm done with this setup, this page anyway. There's just one more thing to do or learn. And that is the memory keys, the storage for individual values being stored. Not in a stat worksheet and not in a cash flow worksheet. But you can just store values. So let me see. What if I want to store the following values. I want to store the value 9 in memory 1. I want to store the number 11 in memory 2. And then what I want to do is take 9 divided by 11 equals, and that result I want to store in memory 3. So that's what I want to do. So you can think about this. There are There are 9. I think you can store in 0 too. Let me see. Let me check this. You can also store in 0. So there are actually 10. Okay, so there's room for 10 memory, 10 stored values. But let's see. So let's enter 9 is store 1. So how you do that is you enter the value, then STO and 1. Then you're going to do the same thing for 11. Then we're going to make a calculation with the stored values. No, I'm going to make this calculation and then I'm going to show you something else. Okay, so ready? I'm going to 9, so I put the value in, use store. Store is here in the third row from the bottom. So 9 store 1. Then I'm going to clear the screen and put 11 store 2. And what I'm going to do is look at the memory. Well, actually, let's just do this calculation first. So then 9 divided by 11 equals, now this value I want to store in 3. So I have 9 in 1, 11 in 2, and the result of 9 divided by 11 in 3. So I can see those in the memory of the calculator by hitting second mem and using the arrow keys to scroll through. So this is another type of a worksheet. So to clear it, you're going to have to be inside of it to clear it. So second, where's mem? Mem is at the bottom. You see here. So there's nothing in 0. If I scroll down, there's the 9 in memory 1. I scroll down again, 11 in memory 2, and then again in memory 3. Any questions? Remember, if the screen is blurry, just refresh. Refresh the page. So let's say I clear the screen, but let's say I want to clear the memory. Let's see if that works. So second, again, going back into the memory. Let's see if I hit second, clear work, if it works. Yes, it does, right? It's clear now. See, there's nothing in here. So it's another worksheet. Questions so far about memory? I want to do one more thing with memory. What I want to do next is recall the memory, and that's the whole point of having the memory, is that you can recall. What's in there? So let's just continue. Let's enter these values again. First, 9 in store 1, 11 in store 2. The result of this in store 3. Then let's recall 3. And multiply it by 11. What should we get? Right. All right, so let's do this. Let's enter all these numbers again. So 9 in store 1, 11 in store 2, 9 divided by 11 in store 3. Then we're going to recall this result because we don't want to type that in. We don't want to key that or type that on our calculator. We might make a mistake, right? So to avoid that, we use the memory key. So 9 in store 1 and 11 in store 2, and then 9 divided by 11 in store 3, and then I'm going to recall 3 and multiply by 11, and I should get 9 back. Any questions? Let me do the memory again. So this is the memory. We have 9, 11, and the result of 9 divided by 11. So people using the other calculators, you should practice, find out how you can do these things. These are the most important things you're going to need to be able to do on the calculator. It's similar in the HP financial calculator. But as I mentioned, the HP is more powerful. It's more expensive, more powerful, and things are done even easier. But you need to learn how to do them. Once you learn, they're easy, but it's not intuitive. Especially with the professional calculators in the HP series. No questions? So that's it. Those are the main memory workspaces, the cash flows, statistics, and this memory. Those are the workspaces. To clear them, remember, you have to be in the workspace and then hit second, clear work, and it clears. There's nothing in here anymore, without affecting other stored values. Because after all this work setting this up, if I hit the second reset option, second reset enter, I clear everything and I have to reset the decimal places, right? So you don't want to do that. So if you have things in the, let's put them back in. So let me do this again. 9, store 1, 11, store 2, 9 divided by 11, store 3, and then looking at the memory, I hit second mem and I can scroll through. Now to clear it, I have to hit second. No, that's not right. I have to be inside of it. Oh, somehow I put 9 in memory 0. I don't remember doing that. Did I just do that? It's weird. Anyway, I want to clear this now. So I made a mistake. Let's say second, clear work, and it's gone. The 10 memory slots from 0 to 9. All right. And I intend on demonstrating with the memory keys so you can practice as I mentioned in preparation to write a CFA exam if you're so interested. And I am going to set up an info session for the CFA exam. I have contacts that from the CFA Society in Puerto Rico. They've agreed to offer a seminar, but a info session about what it entails and how to prepare. Okay. So what's next? Oops. So remembering our discussion from last class that cash inflows are positive and outflows are negative, and the calculator will keep track of that. So when you make a payment, if you have a loan, you've taken a loan, that would be seen as a cash inflow or as a positive, and any payments to repay the loan would be seen as a negative from your perspective in one single problem. You'd have to keep track when you enter into the financial calculator. We talked about the basic time value of money expression, the relationship, the formula. This is found on the third row of your calculator, where N represents the duration of the investment, where it's really T in the formula. N is used on the calculator. I by Y is the interest per year, but it's like interest per period, right? It's the interest rate. The PV is the present value or principal value. PMT is the constant payment that's made assumed at the end of the period unless you tell your calculator otherwise. FV is the future value, and we have set things up so that payments will occur once a period. So we worked with this formula last class. Now in the test situation, writing this formula like this will get you 0 points. What I want to see is that you have the values inserted to solving the unknown. That's what I want to see. Unless I directly ask you, please give me the time value of money formula, and then you'd write this. But if you're solving a problem, just writing this will get you no points, okay? So we did solve this problem here about compound interest, simple interest, and I talked about accumulating. Well, that was accumulation, and then discounting. So this is where we left off with the discounting. And so we are here. Any questions about the discussion we had last class about accumulating, discounting, and the two versions of the formula? Well, really, it's the same formula. It's the same formula. I'm just solving for a different variable. Let me see. So this is the time value of money formula solving for a different variable. So in a test situation, what I want to see is that you write this timeline, that you present me this formula with the values inserted, and this final answer. And sometimes, you know, I prefer if you circle your final answer. That would be really helpful. So I do want to see timelines. Timelines are important for you. If you've gotten the wrong answer, I'll go into the timeline and see if you've misunderstood something. And if it's a legitimate confusion because of the way I stated a problem, I'll give you part marks. So you should always give me your timelines. Sometimes it becomes tedious and doesn't make much sense as we move on and have longer time horizons. You don't want to make a timeline for 50 periods unless it's really necessary. And you'll get the idea. Usually when there are payments, I'll ask for a timeline or expect a timeline from you. All right, so we did this problem. Let's get to the next one. What if we want to solve for a different variable using the same relationship? That is the time value of money relationship. Here's a timeline for this problem. A financial security sells for $900 today and promises to pay $1,000 in 2 years. What is the implicit interest rate? In other words, what's the rate of return on this investment? So we could solve this problem. Some students have asked me about solving with algebra. Now you need to know how to do that. Absolutely. You need to know how to solve what is called an analytical solution. Analytical solution is isolating for the unknown variable. So let's say I took the 1,000. I'm just recopying the problem. So what I've done is, this is the formula with the basic time value of money formula, and I've inserted the values. This is the cash, this is the future value of $900. Even though this is a cash outflow and will go into my calculator as a negative 900, and this is a cash inflow that will go in my calculator as a positive 1,000, those signs do not enter into this formulation, right? Okay, so the calculator keeps track of inflows and outflows to balance this equation. But when I have the equation, I can write it this way. So to solve this analytically, isolating for the unknown, I have to do the reverse operation. I have to conduct, since this is squaring on this side and I need to get to the I, the interest rate, I need to do the opposite operation. Since this is multiplying, I need to do the opposite operation. So I'll start with that. We have to do this properly, right? So we take care of multiplication and division first. And all I'll do is simplify that because I don't want to have to rewrite that. So notice the dollars disappear because I'm dividing dollars by dollars. And then I get this. You with me so far? Solving for I, that's how I would solve for I. Now you might do it slightly different. That's okay. Let me know if you have any questions. So I'm going to enter this into my calculator now. 10 divided by 9, square root minus 1. I'm clearing my screen. 10 divided by 9. I have to say equal. Then take square root minus 1. Gives me this answer. So this is the decimal result, 0.0541. I will take just 4 decimal places right now. But in terms of how many to write down, you'll have to follow the instructions on my problem sets that I send you, and even on the test. Follow the instructions for how many decimal places to write. So in this case, I'll keep 4. Or we can write I is equal to 5.01%. So those are the same thing. So that's the analytical solution. Any questions? I will expect you to give me the analytical solution when I ask for it. Okay, when I ask for it, or if you're solving a problem and you need to, and you can't put it directly into your calculator, you'll need to solve portions of it with an analytical solution before you use the financial part of your calculator. So I will say something like, show your work to show me how you solve for a variable. And this is a way for you to get part marks in case you make a mistake. I can see the rationale, or a misinterpretation. I can see your rationale. In this case, it's pretty clear what I want you to do. So unless I say show your work in a test, all I want to see is this and the answer. Why did I have the wrong number? Why do I have the wrong answer? Did I do something wrong? Sorry. 10 divided by 9 square root. Yeah, I forgot the 4. I put a 0. My memory. 4, 1. You probably wrote it in the chat, but I'm facing a different direction than the screen. Yeah, you guys did tell me. All right. As long as you know. Oh my goodness, my pen is too fine. Okay, so let's put this in our financial calculator now. So when I say show your work, you need to do all these steps. If I don't say show your work, you can just do this. You can just, you show me this, and you give me the final answer. That's it. You don't even have to show me. This will give you no points. If you write this down, but some students like to write it down. They like to write it down just so, for themselves, to be sure what they entered in their calculator. So let's enter this into the calculator together. Notice that 2 goes into N. Interest is what I want, so I leave that blank. And from left to right, negative 900 goes into the present value because that's what will be spent. There are no payments, but you earn 1,000 later, so that's a positive. And then you ask to compute the interest rate. All right, so let's do that. So 2, let's clear this. So I'm going to start now using the third row, which is the time value of money. I put 2 into N. Interest I don't know, so I don't put anything in there. $900 is spent, so I put a negative in front and put it into PV, present value. There are no payments, but I need to put a place mark of 0 in there to tell the calculator there are no payments. Then I can then I can say that it becomes 1,000 in the future. That's the future value. And in the top right, left corner, there's the compute button. I ask to compute the interest rate, and that's it. So it's a very powerful calculator, but if you don't enter things properly, you will not get the answer. So if you will not get the answer, usually because you did something wrong, okay? So in this case, the catch is that the $1,000 needs to be a positive and different sign from the present value, which is a negative. Now the calculator doesn't know the storyline. If you put in the reverse, it'll still give you the right answer. The point is that present value and future value have to have opposing signs. Okay, from the top. So 2 goes into the time. So press the value first and then the symbol or the key. Then interest I leave blank. I want to put 900 with a negative because I spend that into PV. All right. I put 0 into payment, nothing in payment, because there are no payments. It's just a lump sum amount of $900 accumulating to make 1,000. So that's a positive in FV. And finally, I ask the calculator to compute CPT, the interest rate. Okay, very good. So you should be able to do both analytical solution and using the financial calculator. Unfortunately, in the last semester, students really resisted using the financial calculator and then they found themselves stuck. You cannot solve the problems I'm going to give you unless you have the financial calculator. Not in the time allotted. You're not going to solve everything analytically. This is a skill you need to have, but it's not going to get you all the answers. Okay, any remaining questions about solving for I? The formula that we're working with, the time value of money formula, has 4 variables, and as long as we have the results or the knowledge of 3 of them, we can solve the 4th, right? So what if instead of what we've done so far, I give you the future value, the present value, and the interest rate? Can you find T? That's what we're going to do next. So how long does it take an investment of $1,000 to become $10,000? If the return, so this is, again, we agreed, I've simplified things that we're only working with an interest rate at a time. But in reality, there's many rates of return out there. But in these problems, we're going to focus on one with the sense that that's all that is available to us or that we are interested in. In a test situation, I will specify how many decimal places I want. So you just have to read the instructions before you start the test. Okay? Okay, so I'm setting up the problem. I'm using the same time value of money formula, but this is where I get my points, right? So you're going to write this expression with the values inside. And then let's solve it first. As we did for the last problem, let's solve this analytically. Isolating for one variable. So I take what I've written, want to isolate t, so I have to conduct these opposite operations. So that's being multiplied. I need to divide it. And then t is an exponent. The inverse operation of an exponent is what? Notice this, I cancel the units as well. So the inverse operation is to take a logarithm. Okay, so logarithms are the inverse operations of exponents. What this does, because it's inverse, it removes the exponential factor, comes down without going back into mathematics. You should know this. Becomes, so when I want to solve for t, all I have to do is this. All right, so think about that. Ask me if you have any questions. It's similar to if I have a squared value. No, that's not what I want to do. Similar to the idea that if I have if I want to conduct the inverse function of squaring, the inverse function is taking the root, right? So it wipes out the exponential operation here when you take the logarithm in that way. I don't want to say similar to confuse you, but so what do you get? Do you know how to punch that in your calculator? Do you know how to enter that? So to get this, ln 10 divided by ln 1.08, let me show you. So ln is here, but I think you have to press the number first, right? So it's 10 divided by 1.08. So we hit 10 first, logarithm, divided by, you're going to have to use brackets, 1.08 logarithm to get it. Or you can use your memory keys. So the idea is to make a string of data entry on your calculator. You shouldn't, if you need to use intermediate steps, you can store the results in the memory keys. So let's do that again. So I have to put the number in first. So 10 natural log divided by, I use a bracket, 1.08 natural log, close the bracket, 29.9188. So let's keep 4 just in keeping with what I did before, 29.9188. Is that what I got? Yeah. Okay, and what are those? Those are years. It takes 29 years, or if you round it, it's 30 years, right? But a little less than 30 years. So again, for rounding, you're going to have to follow the directions that I give you in a test situation. Here, it didn't give you directions. But 4 decimal is just fine when there are no directions. Okay, let's finish this and then we'll take a break. Any questions so far? Again, because we are entering both the present value and the future value, be careful about the signs. If you don't enter the signs correctly, or at least differently, one is positive, one is negative, you will get an error. You won't get the answer. So let's see. This is how you enter. Using the the time value of money row from left to right. Now you leave N empty. 8 goes into interest. Negative 1,000 into present value. There are no payments, so put a 0 place mark. You have to put that in. And then 10,000 in future value. So I could clear the TVM keys before I do this, or I can just, as long as I enter something into every slot, as long as I enter something into every key, there shouldn't be a problem. Still didn't get it? Do you want me to do that again with this one? One more time. So 10 ln divided by bracket, let me do that again, 10 ln divide open bracket 1.08 ln close bracket. All right, let me know your problems. Let me know what's happening. So to enter this from left to right, making present value a negative, because those are, how did I write it here? Let me make sure. What did I say? Right, it's an investment of 1,000, right? So it has to be a negative, because that's an outflow. I did that again. So let's clear second clear TVM. So now my TVM row is clear. Again, you don't have to do that, but as I'm instructing, I'm just trying to remind you, you can clear that. As long as you override every key with information, you should be fine. So the interest is 8. Now keep in mind, I'm entering interest as a whole number, not as a decimal, okay? That might become confusing. Might become confusing at some point. So remember that on the calculator, it's the whole number that you're putting in there. The present value is 1,000 negative. No payment. We're going to get 10,000. So that's a positive. in future value. And then I asked to compute n. I have at 2. I think it's fine. I'm not sure what the star means. That it's your answer, maybe? Let's see, the asterisk in the upper corner, I guess it's giving you your answer. If I compute something else. Yeah, so these are all the solutions. So if I hit compute, it gives me that the answer is complete. I don't know. I have to look it up. I don't know one. But it's okay. Okay, I just looked it up. It says that it shows that the asterisk indicates that the worksheet is where the solution was is stored. So it says it indicates that the value was computed in the worksheet. It's not an error. Okay. So if we round it to 2 decimal places, so again, just follow the instructions I give you. There are no instructions here, but okay, so if it's 2 decimals, that would be the answer. If it's 2 years, the answer would be 30. So for the test, I want to see this, and I want to see your final answer. And honestly, that's all I need to see. This will not get you any points. Get no points for writing that. Just for writing the formula with the values inside and the final answer as requested in terms of decimal places. So if you see a blurry screen, remember to refresh. Okay, let's take a break. Let's take 5 minutes. I'm back. That's more like 10 minutes, wasn't it? Okay, let's wait for everyone to come back. Questions? No questions? So what's next? All right, so that's just a summary page with the time value of money formula. That's how I'll refer to it, as the basic time value of money. You realize you can solve for one of the variables from the values of the other three using this relationship. And I've written it as the accumulation formula and as the discounting formula. Remembering that T represents the duration of the investment, I is the interest rate in my formula, PV can be seen as the present value or the principal amount invested, FV is the future value or the accumulated amount. Remembering, and this is more relevant later, that we use this formula when we go from the end of a period to the end of a period, or if you accumulate or discount from the beginning of a period to the beginning. You set the calculator to do the either problem, and using the begin mode in the case of beginning. Payments made at the beginning of a period. Now, I haven't done any problems with payments so far, but that's the idea there. Okay, so we're going to get into that some more. In this case, this is just for lump sum amounts. So lump sums invested and then to accumulate, or lump sums to be received, and you want to know what they're worth, either at the end of the period or the beginning. You just have to set your calculator to make it work. Now, sometimes you're just going to do this by hand or enter it in your calculator with the formula, which I think you're used to. Actually, maybe we should, well, we'll do that later. If you want to enter this value into your calculator, I guess you know how. We'll do that later with some problems later. All right. I don't want you to solve the problems that way, so I've avoided it so far. I want you to use your financial keys. All right, so now we're going to talk about net present value. I want to look at that formula sheet first. Let's open the formula sheet up. I want to show you the formula sheet and prove to you that everything is summarized there. So on the formula sheet, what we've done so far is discuss the basic time value of money as a discounting formula and an accumulation formula, and that's why we're here now, net present value. Now you notice in this formula, before we get to it, this formula looks like what? You should know what net present value is, but I want to relate all the formulas together. You know, I don't want you to think of them as separate formulas so much. What you have here are a series of cash flows that are not necessarily the same. You see, because it says CF1, CF2, CFT. They're not necessarily the same cash flow, but they occur through time up till time t. The interest rate stays the same all the time. So these are discounted values, right? So we're just using the the time value of money formula in this variation as a discounted amount. Oops. For all of these values in the future. So what's going on? Let's see. Let's go back to, so here's a story that motivates net present value. You believe if you buy a hotel for $3 million today, you can sell it in 5 years for $4 million. The prevailing interest rate is 8%. So that means that there are people willing to loan you money, right? If you pay them the price of 8% per dollar borrowed. What does that have to do with buying a hotel? Well, you have all options. You have the prevailing interest rate in the financial markets, and you have this, in the housing market, you have this opportunity to buy hotels. How do you put those two together? How do you use it to figure out if you should buy the hotel? Well, you have to compare buying to the hotel to the next best thing, which is not exactly not buying the hotel. It's doing the other thing. It's about using your money in the financial markets to realize this 8%. Because if you don't, you're not a rational investor. You're not a rational person. That's how we think about these things. So if you're aware of all of this, aware of this 8% prevailing interest rate, and you're aware or you believe this is a deal you can make, which one should you do? That's how a finance student should think about this. So how do you figure this out? $3 million becomes $4 million. Is it worth it? So one way you can do this is you can say, well, if I do option 1, which is buy the hotel, $3 million becomes $4 million. If I instead invested $3 million in financial markets, what should it become? Well, we learned that this will become future value at time 5 years would be $3 million accumulated at 8% for 5 years. What do you get? Now you can use your financial time value of money keys or just use the scientific part of your calculator. Anybody get a number? So if you were to do this way, so people have written comments, I'll look at those in a minute. So if I invested in financial markets at 8%, I would have gotten this. So this is better than this one, right? So I should go with not buying. Because it's more lucrative, relatively speaking, to do something else, do the other thing. Earn 8% interest on the $3 million. But that's just using the information there. I'm going to add different possibilities. But right now, what I want to talk about regarding the way that I solve that problem, that's correct. That's a correct use of the formula and interpretation. But in finance, the convention is to convert future dollars into present value terms. And let's look at how that happens, and then let's talk about why it's done that way. So this is what we're going to do instead. Instead of looking at $3,000 and what it becomes, I'm going to offset the initial investment of $3 million and then discount to the present this future cash flow. So this is like giving me the net, right? This is what goes in and this is what I get out. So I'm going to see what the net result is. That's the net present value. This is just the discounted version of the time value of money formula for this lump sum in the future. Now, you can do this in your calculator analytically, punch it in, but what I want to teach you how to do is how to enter it into the financial keys. And the steps involved in that are these. There's two ways to do this. Okay, the first way is the way I've illustrated here, where we're going to use the CF worksheet, the cash flow worksheet. And we're going to put a place mark for every year. Even though there aren't cash flows there, we have to tell the calculator that we're not getting anything or spending anything in those years for this investment. Just the initial investment. And the way we enter it is 3 million with a negative, enter, and then worksheet down. So you go to the next cell, like Excel would make you go to the next cell, right? You'd go down as you would in an Excel spreadsheet. And then the zeros, and then the 4 million in the 5th year. There's this step here, and I'm going to show this. Okay, so let's look at this together on the calculator. Now, this is a simple enough problem. You could have solved this just using the scientific part of your calculator, but I want you to learn how to use the financial keys, and I'll make it worth your while. So what we're going to do is hit CF. So I hit here, cash flow. Now tell the calculator I need to invest $3 million, 1, 2, 3, 1, 2, 3. And I say enter it. That's the initial cash flow. So 0 is thought of as now or the initial cash flow. Then I press the down arrow. So now we're at the first cash flow, end of first year. And nothing happens, right? Nothing's going to happen. I'm not going to spend anything. I'm not going to get anything. So I just enter that and hit down. And it asks me for frequency. How many times is there a 0? I'm going to illustrate how not to use that and then how to use that, okay? So first of all, we're just going to say, well, there's only 1 0 in year 1. Let's go down. Now there's 1 0 in year 2. So enter, down, and then only 1, down. Then in year 3, there's also a 0. So enter, down, and then frequency, there's only 1, down. In the 4th year, there's also a 0. So I enter it and go down. And then frequency, there's only 1. Now I'm in the 5th year. In the 5th year, I make $4 million. So 4, 1, 2, 3, 1, 2, 3. Enter it and scroll down. There's only one of those. So I scroll, hit enter, and then down again. I'm done. All right, so just with that step, any questions? And please do this. If you have the TI 83, 84, or 85, the programmable calculator, this is done differently. And you can find a video on how to do it, or you can read the instructions, but it's done slightly differently. For the HP, it's similar to this. Any questions then? So let's scroll through and look at what we have. We have 3 million initially spent, and then a 0, 0, okay, 0 one time, a 0 one time, a 0 one time, all the way till the 4th year, and then in the 5th year we make $4 million. So it's all in there. Okay, let's repeat. I'm going to clear everything. So I'm in this worksheet, so I say second clear worksheet. So now it's from 0. So CF0, here we are. And I need to say that I spent $3 million. 3, 1, 2, 3, 4, 5, 6 million. And I say enter. And then I scroll down. Then I have 4 zeros. So I tell the calculator to put 1 0 in there and scroll down. And the F means frequency, so that's how many zeros. So that's just 1 in year 1. And enter, and then down. For year 2, it's also a 0. So enter, down, and frequency is 1, enter, down. And for the 3rd year, it's also a 0. So enter, down, and there's only 1, enter, down. And the 4th year, it's the same thing. So I'm just repeating that step until the 5th year. In the 5th year, I spend $4 million. So I earn or I gain $4 million when I sell the hotel, or that's the market value anyway, if I want to sell the hotel. Enter, and there's only one of them. And everything is entered now. So to see that, I can just scroll through. Okay, so there's the initial investment, a series of zeros, and then the $4 million in the 5th year. So let's finish this, and then I'll talk about a different way to do this. So let's get the answer. We want the NPV. You see the NPV there? So we can hit just NPV. But it asks you first for the interest rate, which we know is 8. Remember, when you use your calculator, you don't enter the decimal value. You enter the whole number, 8. And I guess you have to do enter down again. And now it says NPV is 0. So you tell the calculator to compute the NPV with all the information. So you hit this key here. And that's the answer. So what does it mean? It means that in time $0, $4 million in 5 years is not enough to offset the purchase today. It's not enough. All right, so it's a loss for you. So why would you do that? You don't invest. So this is a way of capturing your the opportunity cost. Like this is capturing, what you're not going to get. This 277,000 is a loss for you because you could have taken advantage of financial markets and done better. So that's picking that up right here. So first of all, before I continue with this, I want to do this again, but I want to take advantage of the frequency key, and then we'll talk about this. In another, with a different interpretation. So on this step here, you can do all those steps in one by saying 0, enter, down, and then 4, enter, down. And that will take care of those steps. Because there's 4 zeros, right? And then the 5th step with the 4 million, and then just repeat these steps. So that's a way to get the answer. Yes, one makes the comment that you would be overpaying for the investment. Well, notice that I'm valuing everything against, right? I'm discounting all these amounts as though I'm accounting for the fact that I'm not investing in the financial markets. So the idea is the 4 million in the future is worth what today? And I'm trying to think, well, if I was to, remember we talked about borrowing against or using that as collateral was mentioned. I know I'm going to get $4 million for the hotel. Like we're imagining that this is all known information. I haven't even included the uncertainty of, the risk associated with these calculations. All I've said is there's going to be $4 million coming, and it's going to be that, and there's no question. So what could I do with that today? Well, knowing that I'll get $4 million and pay it back. So could I borrow against the $4 million coming? And the way it turns out, it's not worth it if I think about that and offset that with the expenditure here, this really puts me at a loss in the future. Okay? It's not enough. The investment is not enough. The return is not enough to justify this expenditure. All right, so let's enter this. Let me go back to my worksheet. On the calculator, let's clear this. And what I want to do instead is enter, second clear worksheet. Okay. Oh, see, I have to clear them separately. Okay, so now I have to clear this one. Second clear work. So it's like the cash flows and the NPV are in different sheets. All right, so that's clear. Now I want to enter, doing this again, 3 million. And then I want to tell the calculator that there's going to be a 0, enter, down, but 4 times enter, down, and then just jump to the 4 million to be received. And I should get the same answer if I hit NPV, enter my interest, 8, enter, down, and ask for it to compute NPV. I get the same answer. So people with a different calculator, you have to let me know if you're having trouble, and we'll see what we can do to resolve it. But you need to know how to use the financial keys. You really, in that first test, if I see that it's obvious you're not using the financial keys, I get very frustrated and I don't give points. I actually take points off. All right. So what's happening is we're taking the 3 million as a negative, and then we're discounting this amount of 4 million. So what we're going to get out of that is a 277. So this idea of taking the cash outflow and the future amount to be received and putting it all in one quantity, like here it looks, the 4 million looks great. So this is where I say, well, I know I'm getting 4 million, so this is what it's worth. This is what it's worth to me, so I could use these funds today to do something with, right? We want everything in the present to see what actions we can take.
So as I explained, this 2,722,000, I could borrow against it. I could find someone at 8% to give me this money, and I can go do whatever I want with the money and then return the 4 million later, right? So this is finance. This is what we do. We figure out the value of what we're holding today because of future earnings. The problem is, though, that I have to spend this initially to get this. So this is not enough to offset this initial cost and give me something. So I'm only going to get the 4 million if I spend that now. But getting the 4 million isn't worth it because it's not enough today to offset the initial cost. So it's not worth it. So we do this because that's what finance is. We want to know where we stand today. You know, what is our asset worth today? I know what it's worth in terms of what I can do with it today. I know the prevailing opportunities today. And I know what $277,000 can buy me today. Or sorry, anyway, I know that this is a negative and that's all I'm interested in, that this is a negative. But anyway, whatever amount I get here, I know what it would be able to buy me today in present value terms. So do I need to say that again? Or do you got it? Do you have it? So this is what we do in finance, right? We value. This is valuation. This course is mostly about asset valuation. We're going to value opportunities. We're going to value investment instruments. We're going to value firms. We're going to value projects. So this is valuation. This is what we do. And we convert future earnings into the present because we can imagine what opportunities we can take in present value terms. So this is what we do. Comments or questions? So this is not worth it. So if you still not understanding, basically it's a negative and it's not worth it. It's not profitable, as some mentioned. However, what if, let me just add, so doing it this way, you could get the answer. You know, thinking about it like this, you get the right answer, but I'm not getting the net present value, which is meaningful in finance, right? So this is what I want. I want to figure out what the value today is of 4 million to see if it offsets the cost. Because I want to look for opportunities. If there was a difference here, a positive difference, I could use that money today to do something with it because of the existence of financial markets. All right. Let's move on to a new scenario. What if we're not just sitting around with an expensive hotel? We actually use it. We actually do something with it. We find the opportunity to rent it out. So we find someone willing to rent it for $200,000. Sorry, yes, $200,000, which we earn. And we made a deal, whatever they want to do with it. We figured out that it's worth $200,000 to us. Now is the hotel worth it? So we found a way that we can earn rental income. And this is a capital generating investment, right? So it's giving us money. We're earning income. So this is the new timeline. We earn rental income in the 3rd and 4th year. So that changes our net present value formula to this. Let me give you some time to sort this out. I want you to use the financial keys. I don't want to see, and so in a test situation, you need to write this, and you just need to write the answer and the decision. All right? All of this will not get you any points, but you need to do these steps. So some students that refuse to learn the calculator will do it this way, and they'll calculate everyone separate and add them all together, and often their decimals will be off and they'll make mistakes somewhere, and it's just not worth it. So learn to use your calculator or you will lose marks. It turns out that the NPV is positive in this case, so now it's worth it. So it means that we'll earn $28,000 net. And so in present value terms, I can do something with this money. I can borrow that money and then repay it at 8% return. And that's captured by using this formula. So Diego's asking about yearly dividends. It's the same thing, same sort of thing, Diego. And we'll talk about that. When you work with dividends, trying to value stock, we're going to talk about that. Same sort of formula. Except if it's dividends, okay, so if it's valuing stock, which we will talk about, dividends could be imagined forever, so it doesn't necessarily cut off. And we'll talk about how to deal with that. And these are mixed cash flows. These are not level cash flows, so that's why we have to do it this way. All right, so you've learned this before, and you're just sorting out in your mind what is this and what is this not. So that's fine. You can just keep throwing me your questions. Right, so we could do something knowing that in net, we're going to have $28,000 today. That's worth something to me. Maybe I can find someone, or I decide I'm going to do something with that money. I'm going to borrow that money and then return it because I'm making these returns off of this asset that I'm holding. So that's the value. That's the asset value to me today. That's what I'm holding. It's worth it, so yes, I should invest if I buy it. I'm holding this. Okay, so try that. Make sure you can enter that, and we'll get on to the next one. Let me know when you're done, so I have an idea how many people have succeeded in entering this. So Miguel posted the notation for the TI 83 or 84, 89 calculators. That would be the notation that you use. He's right. Thank you. You're done. Okay, I'll wait for a couple more. Okay, very good. Okay, no questions? So this is the convention then, that we convert future cash flows into present value dollars so we can assess with that amount what to do. You know, if it's positive, it means it's a profitable investment. If it's negative, it means it's a loss. So in this case, it's profitable. So next, I'm going to speak about the case of mixed cash flows. Now, this is different from net present value in that I'm not giving you the initial investment. That's about it. I'm not giving you the initial investment. I want you to tell me what would be the maximum that you would pay for an opportunity. And this example here, to illustrate, an investment opportunity promises to pay the future cash flows presented below. What is the fair price? So what is the most you'd be willing to pay for such an investment? So this is what's coming to you. So it looks like the net present value case where there's future cash flows. However, I didn't give you the initial amount, so you have to figure it out. Now, since it's the same, it's going to be the same formula. However, I'm looking for a different variable. How do I do this? That's the question. So here is the same sort of formula expression. but I don't know the initial cash flow. But the most I'd be willing to pay for this would give me a break-even 0 NPV. So this is like setting the NPV to 0 gives you like the break-even amount. All right, so are you with me so far? So I want to find this, solving this expression, and this will give me the most you're willing to pay. Right, Tanya, so to clear your, you need to be, so go into, so to clear, be inside, so hit CF, and then second, clear work, otherwise it won't clear. You have to be inside CF. So what we've done is presented here the most you're willing to pay to get just 0 NPV, so just break even. Now remember, the rule was the NPV rule that we were using above to invest to make investment decisions is NPV greater than 0, right? So making it 0 is you know, it's not going to give you a return. It's going to just be break even, right? Which is fine. We're trying to figure out the value of an investment, which is fine. So it just gives us the threshold, like the most we're willing to pay. So if we get an offer to pay less than that, we're going to take it, you see. So we call that the fair price. All right, so this is what we're doing. But we rearrange these two to enter this into our calculator because we can't set the NPV to 0. We can't do that on our calculator. But we can set the first cash flow to 0. Actually, we can set the NPV to 0 if we're solving for the interest rate. We're going to talk about that later. But to do this, we can't do it. So instead, we let 0 be the first cash flow, and then we interpret this NPV as the value of the investment, okay? So 0 is the initial cash flow. That's going to be the CF0. And then these are the mixed cash flows. So enter all of this and then ask for NPV at 8%. And what you're getting is the fair price for the investment. let me talk about the time. Well, let me show you this first, and then I'm going to talk about the timeline and show you something interesting. At the hopes of not confusing you. So this is, remember, NPV is equal to negative CF0. So that's how we interpret with a positive NPV. That means that CF0 must be an investment of 9,518. Right, because it's a negative cash flow. Okay, so calculate this, and then I want to explain this to you with the timeline. So some of you might have read through these notes and you're finding this boring, and that's okay. It's good. Once you, well, I mean, you should never be really bored, but you need to master this, so it's good to review, right? You need to master, and you're always going to ask yourself questions. You're going to say, well, what's the difference between this and NPV, and what did she do, and why is she doing that? Go deeper with those questions. You know, now that you get how to enter this in your calculator, you get the general idea, start going a little deeper and questioning critically what we have here and how it's different from what we did before, and that will help you commit this to memory and be more creative in your thinking and more critical in your problem solving. Much more of a critical thinker. All right, so yes, anybody can do these steps, but what does it mean? That's where I want to get to next. First of all, how many of you got it? Tell me. I actually think you can skip this step of entering again. I think you can just do down, down. Because it already has a 1. The screen already gives you a 1, so you probably don't have to enter. So you can just do enter, down, down to get to the next one. Okay, very good. So most of you got it. All right, so let's see, what does this mean? So if we invest 9,518 now, we will get this amount, that amount in the future, but nothing up front, because that's what we spent, right? That's what it means. So back to the timeline for a moment. So back to this timeline. Let me make it big. So investing this amount today earns you this in the future. What is the future value of these amounts in the future? This is like a secondary question, critical thinking, right? So what is How would you figure that out? What's the fastest way to figure that out? Where this is an initial cash flow, no, let's not do it like that. We'll just say these cash flows here. Of what whole thing? Of each of these amounts, one? So what we did so far was we discounted this one twice, this one 3 times. That's what the formula is doing, right? Etc. So do I just go that way? Or is there a faster way? So what you've solved for, one is right. So what you've done is you've figured out the present value of these future cash flows. You've integrated the concept that there's a trade-off with the 8%, right, of interest. You figured out that the total today of these amounts coming is $9,518.35. That's the value today to these arriving in the future. So all you need to do is accumulate that to the future, and that will give you the answer. So these values have already been accumulated here and accounted for, with the 8%. You've accounted for time value of money. So now that they're all together, I don't have to look at these anymore. All I can do is I can move this lump sum into the future and figure out the value. So what is that value? You can use your calculator. So the formula is I'm just going to take it like this, but in the future I'll ask you to keep all the decimal places. But let me make sure this is the right number. Yeah, 35. All right, so you want to do 1.08 to the 5, and you want to find what it is. So in your calculator, you enter 5 into n and 8 into interest, and then present value is 9,518.35 negative. And then there's no payments, right? All I'm doing, I'm not looking at, these are payments. These are like payments, but I'm not using that key because that key is used in a special way that we're going to learn about. Okay, that's not with this kind of payment. I've already taken account of all these payments and the time value of money. I've put this all together. So now I can just compute the future value and get my answer. What do you get? Right, 13,000. Okay. So this might be a little confusing for students that I can do this, but that's the idea, that I've already integrated time value of money. So the future value of these cash flows is this amount. Now that I've written it down, it makes sense, I think, that I could either calculate the future value or the present value. They should be on the same timeline. I mean, they're related to each other. However, I'm not putting a lump sum. I'm going to invest this and get these amounts, which is worth this today, 9,000, but in 5 years, and by doing this, this is all done at 8%. I've captured an 8% interest rate. The reason why I'm telling you that is because you might say to me, why would I pay $9,518.35 now to just break even? Because that's what that expression showed you. I made them equal to 0. Or maybe you didn't think about it at all, but now I'm telling you. All right? No, because you have to spend. So who's saying? One, yeah. No, because you have to spend this now. This amount, at any point in time, I should be able to accumulate it. Anyway, you can think about it. Think this over. Tell me if I'm wrong. It's a conundrum. So the way that I asked the question was to find the value today of these future cash flows, right? So it looks like it's, if you were just to add them, forget about time value of money, right? If you forget about time value of money, this is like 1,000, this is 2, 3, 3, 6, you know, it's, if you just add them without the time value of money, you see, it's about $10,000 or something, right? But that's not the case because they all accumulate a different amount. So what I've done is I've reduced them to a single amount. So this single amount represents the value of getting this and this and this at these different points in time. So if I want to figure out what this investment would be worth here, that's a different question. So that's the value here. But I have to spend this amount to get that, right? So anyway, this is like just think about this. This captures what we're going to be doing, where I'm going to give you amounts and I'm going to ask you for their value at different points in time. So these amounts here have this present value and this future value. Think it over. Exactly. So if these amounts, this is what it's worth to get those later, and if I leave them earning interest, this is what they'd be worth in 5 years. Okay, if you did nothing, if you took the money and you did something else with it, but this is what they're worth if you allow them to accumulate. So the reason why I'm telling you that is because some students might get confused, maybe not, but some, usually few, will say, well, why am I spending what I get? Why would I spend this to get the same amount? Like this becomes 0. And it's to capture the 8% return that I represented here. So just realizing lump sums can be accumulated over time. And I can talk about the value at time 5. I can talk about the value at time 0. But that's the value of the investment. So think about that. And maybe I'll mention it again soon, so it'll click by then. But what we figured out was the fair price. So what did we do so far? So we've done the mixed cash flows. And what we have to get into next is annuities. All right, so we're going to get into annuities next. For those of you who want to work ahead, what you should be working on the documents that I gave you and solving those problems. So doing your best to solve the problems, and you can look at the answers for what I've given you, but work ahead to complete those exercises, all right? So I gave you the problems like this one. This is a problem set. So I give you an idea of what the kind of points I might give you. These are not to be handed in, but just gives you an idea of what that would be worth like on a test. So try these. You should be able to do all of these right now. Well, maybe this will be from Remembering 3106, because I believe you learned this concepts on with annuities. So practice doing those. I do give you the answers. I gave you the answers as well for that problem set. And I made a timeline. Oh no, did I send you this with my timeline? Maybe. Okay, so you can solve those, and then you can start the annuities handout. So read ahead, work with annuities, what you know, lay things out, and we'll talk about this next class. So we're going to be focused on annuities, perpetuities, and I guess finishing the formula sheet. So we have perpetuity with growth, and annuity. We're going to cover those next class. So any questions? Okay, so I'll stay on for a few minutes if people have questions, and the rest of you can go. Have a great weekend and a good week. Complete these documents, and then next week, once we finish all this, I'll put up a Connect assignment to be due on a Thursday before class, so we're all on the same page. Or at least you know what I expect. So practice those exercises, have them complete for next week, and to the best of your ability.